Good morning, everybody. Welcome to the Moving Markets Podcast. I got to tell you, I am so glad to be back online, back at my home. I will miss my little grandson and my daughter and her husband tremendously because I have thoroughly enjoyed spending this past week and a half with them. But wow, I told my son-in-law, you got to do something with your internet connection. They've got one of those metered internet connections that later in the day the signal seems pretty good, but in the nighttime and in the early morning hours, their reception sucks. I couldn't get a strong enough internet signal to just do the basic podcast. I couldn't even record one, and then I was busy, helping take care of my grandson. My daughter was recovering from a gum graft and which painful procedure that is just not easy to recover from. And so I was there taking care of her little boy and kind of taking care of her. But anyway, very, very glad to be back. The market is open. It is Wednesday, July 29th, 2026. Stock market has been open for about a minute and a half almost. Things in large part are down right now. Let me take a look. This has got a little bit of a delay, obviously, but let's take a peek at where we're at here. This is still showing futures, so I'll refresh it real quick. Yeah, there we go. Everything pretty much in line with what futures sort of made it look like it was going to be. Um, we've got the Dow Jones Industrial Average down, taking a pretty big hit. A lot of that is on Caterpillar. If you were watching Discord this morning, I did a grok search on why was Caterpillar down so much pre-market, and you may have had a chance to read that. They got a downgrade, and the downgrade is tied into something that is a broader concern, I think, over a lot of the market, especially the chip manufacturers that we have seen take such a big hit these last few weeks. The chip sector has just been really, really beat up. And I heard a better explanation of it this morning than what I have heard previously. And Caterpillar ties into this. And what that explanation is that you've got these big mega, magnificent seven companies, these companies that are so heavily investing in AI, Microsoft, Google, um, uh, the other big Amazon, the other mag, or some of the other mag seven. You've got these companies that are so invested in this AI race, and you've got the chip manufacturers who need very badly for the capex spending by these companies to remain very strong and very robust. In other words, the investment they're making into the purchasing of chips and hand in hand with that is the data centers. So it's you've got you desperately, and desperate might be a little bit strong of a word, but you need so badly for the capital expenditure for these things to remain very, very high. But simultaneously, you've got investors that are worried about when and where will the payoff be for that capex expenditure. Is the juice going to be worth the squeeze, is kind of the way I like to say it. So you've got sort of these two competing things. You've got on the one hand, you don't want to see that capex spending decrease at all, because that would be potentially devastating, at least short term, for the chip manufacturers, the data center builders, and by association, Caterpillar. The reason Caterpillar was downgraded by Baird, I think it was, the reason they were downgraded is because of the regulatory environment over these data center builds. That's what Baird cited as the reason for the downgrade on Caterpillar. They said, New York has put a ban on data center building, and allegedly there are other states that are in the process of doing that, or considering doing that, or have already done that, or tried to. And there's worry that other states will follow suit. And so, there's all that nervousness around, what is the regulatory environment going to do to this? Is that going to make it even more difficult for the capex spending to pay off? What if any of these companies decrease their guidance on what they plan on spending? And so you're getting this kind of ripple effect. Now, I believe that hand in hand with that, some of what's going on is just some of these chip manufacturers, some of these tech giants, they just got overvalued. They had such massive, fast growth that they simply got overvalued, and people understandably got nervous about that. They started looking at the valuation of some of these companies. I read a great article, and I think did I post it to Discord? I think I did. Um, I think I put it on our Discord channel. I read a great article while I was in the airport yesterday about ranking the Magnificent Seven from the most to the least attractive, and it was based almost solely on what the valuation is, very relative to how the market is valuing other companies. So the valuation of, I think it was Amazon and Meta came in the lowest. Therefore, according to this article, they were the most attractive of the Mag 7, were Amazon and Meta. We're going to get a good read on Meta because they report after the market closes. So that'll be fun to see. And then we've got they continue to rank, and I want to say I'm trying to remember now from the article. I think Apple was the worst. I think that was the one that they rated the worst. Nvidia was kind of in the middle, maybe. Okay, here it is. I pulled it up on another screen, but in fact, actually, I'm gonna pop it over on this screen so you can see it. In case you didn't read this when I posted it yesterday, um, according to Wall Street consensus cash flow per share estimates. So Meta at 9.4 times the estimated forward year cash flow was the lowest, therefore the most attractive, the way they're valued. Then Amazon, then Microsoft, Alphabet right in the middle, Nvidia moving towards the high end. But look at where Apple and Tesla are. That's a big jump from Nvidia to Apple, considering the much smaller jumps. You've got a very small jump from Meta to Amazon, a little bit bigger from Amazon to Alphabet, excuse me, Amazon to Microsoft, and then Microsoft to Alphabet. Pretty close, only a little tiny bit higher for Nvidia, and then that's a big jump, almost double to Apple, and then a little more than double that to Tesla. So that's I thought I just found that interesting, and I think that sort of ties into you've got valuations that became a challenge and a problem for a lot of investors, at least at the very minimum, a concern for a lot of investors. And then you've got this regulatory environment, the capex spending. It all paints a picture where you've got some concern. If I think earnings are going to pretty consistently with these companies, especially the ones reporting today. You've got such a big day today. I mean, today after the market closes is arguably maybe the biggest day of earnings in terms of just the impact of these companies. Sorry, it's not there. Microsoft, Meta, Robinhood, Qualcomm, ARM, different industry, obviously, but Chipotle, Starbucks, MGM. I mean, you got some great big names here, but right there at the top, those top five right there. Robinhood, interesting they put that in the top five, but Microsoft, Meta, Qualcomm, ARM, and then you go out to tomorrow afternoon after the market closes, you've got Apple and Amazon. So this week is just absolutely huge. Um, and starting with today, and I mean there's been other important reports already this week, but starting with today, just absolutely massive. So all right, let me shift gears. I am trying right now, if you were watching Discord, I am trying to get into new trades on Robinhood and Valero, and I'm looking at my live streaming open my broker page right now, and you've got Robinhood. The mid price is trading below what our limit is, and so I'm a little bit Um, Disappointed to say the least with that one not filling. But what I haven't looked at is exactly yeah, it's trading pretty close to where it finished yesterday. So the strike prices are not far off of where we'd want them to be, although the put side of it is a little bit close to the money. But I set a limit order for 165. It's been at 161, 162. Right now it's at 163, 161 again. Not filling there. So I'm going to play around a little bit with the number of contracts that I'm trying to get into, see if that will make any kind of a difference. Um, and then Valero, I would love to get into Valero too. They report tomorrow, Robinhood today after the market closes. Valero, I wanted to get in at 195. I saw the mid price at 195 just a few moments ago, but right now the mid price is at 210, and then I just saw it jump to 220. Um, and I'll have to take a different look at Valero because Valero's up $9. In fact, I would say this right now. Scratch that Valero order if you haven't done so already. I'm going to look at some different strike prices for Valero simply because Valero is trading much higher than it was yesterday at the close of the market. So I'm going to look for some different numbers for Valero. Same expiration next week, Friday the 7th. But I think I'm going to look at on the put side, maybe going 305 long put, 302.50 short put. And on the call side, I'd love to do 310, 312.50. But boy, the mid price on that is $2.40 right now. I would only do this trade if I could get it down around $2 a share. If I couldn't get it at or below $2 a share, I'm really not interested in doing it. But I'll play around with it a little bit, see what we can do, see if we can come up with something that will actually work. Because I would really love to get into it. So we'll see how it goes. But Robinhood and Valero still would love to get into those. Applied Digital down $1 today. That's making our trade look very, very good. We need to finish below $27 a share at the end of the week. Right now, it's a buck and a half below $26 or a half a. It's a dollar and a half below where we need it to finish, and the option prices are getting closer to where they should be to be in line with us being able to get a good target profit on that. I'm trying to exit that one. I'm trying to exit it at $1.95. I don't think it'll take long for it to get there. I don't see them going back above 27. Boeing is down a little bit today, but our trade is still profitable, and our short call is still deep in the money. So I think we're going to be okay on that one. I don't think there's anything to worry about with the Boeing trade. And then I'm very very genuinely hopeful that we can get into this Robinhood trade. It's the mid price has jumped up to 176. Hopefully, and it's going to be a tough one to get into. Don't give up too much ground on it. Don't I want to get in at 165. I mean, you know how we play around with them sometimes and we change our limit order by a penny or two? Like at the very, very most, I would say maybe if you could get in and you had to go to 166 or 167, that would not be a horrible thing. Because if we get filled on this today, let's say we get filled on it this morning and we're able to close it Friday morning or possibly even tomorrow morning, it's a 1 or 2 day trade. So even if we're only getting 12 or 13%, that's a really good return, in my opinion, on such a short-term trade. So I would consider on that one doing like 166 or 167, but I would not give up more than that. Hypothetically, if you went to 167, the max you could make would be 33 cents a share. Divide that by 167, and you're still just barely shy of a 20% trade. So really, nothing to balk at by any stretch. Because to possibly get 20%, literally in just a day or two on a trade, I personally would take that without hesitation. The mid price on the Robinhood trade has now dropped to 160. but man, it's like I said, it's going to be tough to get a fill on it. And I'm not going to, I'm not going to cry over spilt milk. You know that saying very well. I'm not going to be too bothered if we can't get into that trade, if it doesn't open and we don't get in. There's going to be plenty of other trades present themselves in the next few days, in the next week or so. So again, I'm not, don't get too worked up if you're not able to get a fill on that. Um, it'll come. There'll be some others that'll come along and we'll do well with them. So, um, at the strike prices that I gave you a minute ago, if you want to try Valero again, you can do that. But I'll put something on Discord. I'll rework a trade. I'll get an image set up for it, and we'll try Valero again. I show the mid at 170 right now for Valero, which for a 250 spread would be phenomenal. Holy smokes. 180, I show the mid now. Okay, so this is on the put side, 305 long, 302.50 short. On the call side, 310 long, 312.50 short. Mid's 190 right now, and this is for August 7th expiration. I would so willingly pay 190 on this. I really would. I would have like no issues at all with 190. So that's the plan with Valero, and I'll take a screenshot of this momentarily and get this online for everybody. But I would be ecstatic if we could get in right there. Um, yeah, to me that would be a very good trade for the end of next week. So we'll give it a try. Um, All right, that's all I've got for today. I'm going to give a lot of collar trade updating over the next couple of days. There will be plenty to do with collar trades, um, and we'll kind of bring those up to speed. And so I'm going to wrap up right there for today. Like I said, very, very glad to be back in my own office and back online doing this live. Thank you, everybody, for being patient with me not being able to do that last week in the first part of this week. And normal schedule for the forthcoming, honestly, right up until Labor Day weekend, where we'll just have a holiday one of those days. I've got a very normal schedule that should be uninterrupted. All right. Thanks, everyone. Have a great rest of your Wednesday. See you tomorrow morning live. Bye bye.